The dollar traded at the lowest level in a year before today's FOMC decision, growing evidence the global economy is recovering, encouraging investors to buy higher yielding assets. Let's get to our guest this morning, Emmanuel Ng, a currency economist with OCBC here in the Lion City. First off, Emmanuel, let's start with an email we got today. When do you see the dollar stopping its fall? When hyperinflation kicks in, when gold cracks the $1,200 level, or when oil moves to $100 per barrel?
Well, I think right now it's probably a little bit early days yet to talk about a dollar recovery or on the flip side of it, a withdrawal of risk appetite. Typically, I think when we start to have the Fed crystallizing the Fed rate hike expectations, you may get a little bit of a dollar support. But we continue to stress that I think you basically need a couple of preconditions. You need the U.S. consumer to be surely back on its footing. You need the U.S. labor market to actually stage a fairly decent recovery. If we continue to run into if we run into a jobless recovery in the U.S. In the next couple of quarters, for example, that's an eventuality that we cannot rule out. If that happens, and even if the Fed starts talking tough on inflation and the prospects for rate hikes, then the dollar may continue to see a fairly bumpy road ahead. And don't forget that at this, sorry.
What message do you expect the FOMC to send today, and how much of that has been factored into the market already?
I think a fair amount has been priced in since going by yesterday's price action and also this morning's price action. The mood we think is fairly evident in favor of ongoing risk appetite. Note that Bernanke last week basically stated that the U.S. economy is technically probably out of the recession. So tonight, for the FOMC statement, we would expect the Fed to actually lighten up or brighten up its language in terms of their economic prognosis. But going forward, we think that if that is the case, and if they do not highlight near-term prospects for rate hike prospects, then I think the markets may revert back to the risk-loving behavior that they have actually demonstrated over the past few weeks.
Emmanuel, in 20 seconds, the Kiwi dollar at its highest in about a year. Too much, too soon?
Well, I think that possibly two factors. One is that, number one, the Kiwi's ascent has been fairly linear if you actually look at the charts. And secondly, I think this is pretty much a symptom of investors out there looking for yield, looking to put on risk on the table after the summer break. So we will continue to ride the momentum for now, actually.
Emmanuel, back with Emmanuel Ng after the break. Stay with us. Now, let's get back to currencies. Our guest this morning, Emmanuel Ng, a forex economist with Overseas Chinese Banking Corp. He joins us in the Singapore newsroom. Emmanuel, let's take a look at Asian currencies. You see them as a recovery trade. Which currencies in particular do you see outperforming? I mean, we've heard bets on the rupiah, the rupee.
Well, I think in terms of the Asian currency environment, it's pretty much a huge used car lot that we are going to have. Basically, if you're looking for different recovery scenarios, you would get a whole buffet of Asian currencies that you would want to look into. Number one, if you start to look at the China connection, then inevitably you would start looking at the Korean won, the Taiwan dollar. These guys basically have a close economic ties with China in terms of trade linkages. And they also represent fairly significant target asset markets for offshore investors. On the other end of the spectrum, if you look towards economies with fairly healthy domestic growth dynamics, you would basically run into currencies that we favor that would include the Indonesian rupiah, that would also include the Indian rupee. And lastly, if investors would like to ride on the expected recovery profile in the export cycle, then you would also start to favor the Singapore dollar, the Taiwan dollar. These currencies and / economies are intimately tied to the global export cycle. But so far, we continue to see only fairly tentative signs of a pickup in the export momentum across Asia itself. So it runs the entire gamut of Asian currencies if you're actually looking for a recovery trade within Asia itself.
about the yuan, Emmanuel? I mean, Stanchart saying the yuan may gain 24% to 5.5 per dollar by 2015. China, it says, is expected to keep posting current account surpluses, and that President Barack Obama will press for appreciation.
Yeah, the renminbi remains a billion-dollar question. In the near term, I think if you look at what the official commentary coming out of China has actually tried to tell the markets, they have reiterated time and again that the accommodative fiscal and monetary policies will not be turned off abruptly, so the tap will continue to flow. And on the currency front, I think that's pretty much the least of their concerns right now in the near term at least. So we do expect a fair amount of stability in the dollar CNY out to the end of this year. Beyond the next couple of months, if and when the global economy, together with the Chinese economy, gets back on a surer footing, then we would expect the nominal effective exchange rate of the renminbi to resume appreciating. And that, by default, will continue to weigh on the dollar CNY on a medium to long-term basis.
Emmanuel Ang, Overseas Chinese Banking Corp, thank you so much for your insights today.